Okay, welcome back. We've got the market, which is doing very well, no problem at all. Let's move on to our next management. Senco Gold is in focus. The jewelry retailer has posted a good set of first quarter numbers. Revenues are up 30% on a year-on-year basis. It's a recent listing as well. Management earlier, of course, said that they are witnessing robust momentum in both footfalls at showrooms and revenues across markets. Remember, Senco is the market leader in jewelry, gold jewelry, in the eastern part of the country. They're a long-established player with decades of sort of experience. We have Suvankar Sen, Chief Executive Officer at Senco Gold and Diamonds, now joining us to take some questions. Thank you very much for joining us, Suvankar. Good morning, Prashant here. Could you, I mean, we are entering the festive season, at least here in Maharashtra, with Ganpati festivities around the corner. But could you give us an update in terms of how growth has panned out in Q2 so far? And have you been able to maintain that 30% kind of momentum into Q2 as well?
Usually a much more, a softer quarter. You don't have too many weddings. At the same time, the festive seasons are not really there. People wait for the monsoons to be a good one for the Q2 so that we see the results in Q3. So though we are seeing, growth in Q2 compared to the last Q2 that we had in the last financial year. However, it will not be as robust as the way we saw it in the Q1 with the weddings and Akshaya Tritiya coming in. But at the same time, we are very hopeful that Q3, which is the festive season, the sentiments look quite positive. It is not just us at our company, but overall the industry also is very positive and robust to prepare for a good Q3 so that the consumers, when they will come in to buy for the upcoming wedding season and the annual savings that they do through buying jewelry in the Q3, it looks to be very positive. We are in touch with our customers, we are coordinating with them, and they're all looking forward to coming for the festive season and buying.
Okay, all right. Good morning, Suvankar. Thanks so much for joining in. So given that Q2, they are seeing growth, but maybe not as good as Q1, and second half of the year saying is shaping up well. For the year, what kind of a number are you looking at in terms of revenue growth as well as margins? And also studded, I think, unit had moved to double digits. Where do you see that number headed from here?
So see, in the last 3-4 years, if you've seen our growth, we've been growing at a kind of a 15-20% CAGR, and our endeavor will be to continue that kind of a growth and momentum on an average between 15 to 20% for the whole year, as well as the margins, while the percentage terms in Q1 was under pressure because of the way that, we all want to grow, and the objective of the company and the industry is to acquire new customers. So we are giving offers and schemes and various discounts to our consumers so that the interest to buy jewelry continues to remain. So the margins will be, we don't see too much of a growth in terms of margin. The percentage will be same as we have been seeing in the last year, and a little 0.5% here and there. And growth also, as I said, will be in the range of 15 to 20% compared to last year.
The studded share, you had to give us that number? That's
Studded share, see. Yes, so with the gold price rising high, and we saw a pretty good studded share and the growth in diamond jewelry in the last quarter, and I think that continues to remain because the way the fashion, the lifestyle, the need of the consumer is that with their kind of clothing and lifestyle, they would prefer more and more studded jewelry. And the conversion from gold to diamond jewelry is happening quite well. And we also are aware that there has been a slight pressure internationally on a bigger size diamond, like 30 pointers, 40, 50, and a little higher. So that benefit of passing on lower diamond pricing to the consumer is happening, and that is also building in interest, and people are looking forward to buying more diamonds.
So what will your studded ratio be? I mean, I think now it's 11%. How much will it go up by over the next 1 to 2 years?
So see, our endeavor that we have set ourselves is to take it to around 13, 14, 15% over a period of time. So step by step, in a sustainable manner, we will keep pushing it by 1.5%. That's the focus and the plan that we have.
Okay, so you look to take your studded sales ratio higher. I'm a fan of studded jewelry, so you have me sold there. But, I wanted to understand, you said 15% top line growth is what you're looking at. But in Q1, your volume growth was in the range of 8% for gold and 34% for diamond. So both on gold and diamond, what will the average volume growth be over the next couple of quarters?
the volume growth is driven. See, when the gold prices go up, what we have seen is that usually the volumes take a hit. It is in value terms that we see the growth becoming higher. So even if we look at the Q2 kind of numbers year on year, we have seen that the volume growth has been in single digits, but the value growth has been in double digits. So similar situation is happening in Q2, and I think that with more and more stores getting added, we will see the volumes coming in from there. From the existing stores, the volume growth will also be marginal because it all depends on the budget of the customer and the availability of liquidity to buy jewelry. So that's how it is. And we expect volume growth, but in lower terms, maybe high single digit or mid single digit, and value growth will be in that 15 to 20%.
Suvankar, in terms of sort of store additions, I think as of 31st March, that number was 136. What's the latest every year? How many stores will you add? Will all these be your own, or will these be franchise? And one more question. Sorry, go on.
No, so in quarter one, we added 6 stores, mixture of own and franchisee. We had more of own stores, 1 franchisee. Quarter two is about to end, so we've added 2 more stores in quarter two. And last 2-3 years, every year we've kept adding 10 to 12 stores with a mixture of own store and franchisee. We would like to take it a little higher with the IPO coming in, with the funds coming in. For the next coming 1 or 2 years, our number of stores that we would like to open would be in the range of 15 to 20 per year, where we'll have about 8-9 own stores and 6-7 franchisees. So that's how we are planning out and trying to go forward.
And these all will be in the state of West Bengal, Suvankar?
No, not at all. See, our focus has always been in Eastern India and Northern India. So West Bengal, there will be 2-3 stores in West Bengal, but it will be spreading over Bihar, UP, Delhi, Bangalore, Pune, so all over. See, out of the, though in our 136 stores that we had about 60 to 70 of them in Bengal, but the rest 50 were spread across 14 Indian states. And we would continue to, pursue the growth in various eastern and northern part of the country. That's our focus area in expansion that we see.
Okay, all right. Give us a few more details, Suvankar. What about online sales as a percentage of your total mix? How much is it? Do you see that number moving up?
No, so online sales is in the range between 1 to 2%. We treat it just like a store. So if kind of a store would have a 30, 40, 50 crore of sale, we see a similar traction with online. Though what is happening is that, as a retail brand, it is our duty to keep uploading the designs and the latest trends that we are coming up with on our online platform. And, people are looking at it. So there is something called a digital driven or digital led sales. So people look at it, they then find out from the store, with the customer care helpline, and then they take a decision either to buy online or come to the store and take it physically.
Okay, all right. Thanks a lot for stopping by and filling us in with all of those details.